All right. You are looking at the Nasdaq, a daily chart of the Nasdaq. I'm just going to review some stuff that I've gone over recently. We're just observing what the index is doing and not predicting anything. Friday, we'll just say that it did give back 15 points or 0.11% and closed at 14,250. It was on light volume. The holiday trade last week was, mostly on light volume. But I'll just say that since the July 19th correction, we had these three waves down. It was a 12% peak to trough, three-wave down correction, pretty standard, pretty textbook. After this nice long run from the breakout from May, we had a nice power trend here. But anyway, I don't want to go too far back. I want to look at what happened here recently because we had the three August, September, October months where the Nasdaq sold off. And then on November 1st, we had our follow-through day. This follow-through day was successful where others had failed. This follow-through day here on November 1 rallied right back through the 50. It had subsequent follow-through days, which is what we look for. And you can see this big hammer candle here on November 10th with the 2% gain. But if I take a look at the weekly, you can see this three-wave down pattern here. And then the reversal at the end of October. And then we had three hammer candles in a row where it closed near the high of the week of the 3rd, the 10th, and the 17th. Last week, lighter volume, holiday trade, but still was up, 0.89%, so nearly 1% gain. It's just you could see the tight trading there. That's a tiny little bar there, where the high was 14,359 and the low was 14,134. I need to see the Nasdaq take out that 14,446. I go back to the daily charts. Sorry for jumping around so much, but this right here is a point of interest for me. The 14,446 from July 19th, that old high. It's getting near there, but it needs to take that out to rally higher. But we are in an uptrend, a power trend. You can see it's making, higher lows, and now we're making higher highs above the 13,174 here and above the 14,149 here. And now we got to get above the 14,446. Anyway, that's it for the Nasdaq. We are in an uptrend, we're in a power trend. I know Mike Webster was tweeting about, some people giving him a hard time that the power trend doesn't work, but it works for us. It certainly worked here. And, this is where you want to go heavy. Size matters. You get big size, you make, making money in the stock market's not a linear process. You make big money here, and then you lighten up here. You go eensy beensy, teeny weeny, size here, and then now you get big as we go up, as we get back in that power trend. So if you play it that way, make big gains, take little losses. Make big gains, take little losses, and that's the way we're doing it at MC Stock Charts. Anyway, I want to take a look at some stocks because there's a lot of folks saying the 4 weeks of gains, the Nasdaq's extended. There's a lot of stocks extended. That's true. That's all true. And a pullback, we would embrace pullbacks. And I'm going to talk about extended stocks later, but right now I want to talk about stocks that I like, stocks that are setting up. And I'm going to have to start with the Magnificent Seven. This is Apple, and this is not extended at all. I mean, it's just setting up in a base here. It's a weekly review, so I got to go to the weekly chart. And you can see this cup-shaped pattern from back in, had to be July 19th, right? So since July, so this is a nice 18-week cup-shaped pattern here. And if it pulls back and forms a handle, we embrace the pullbacks. That's one thing that I think you have to change your mindset now, is where it was selling off and people were getting hurt. Now, if it pulls back, we're going to look for support. And that's what's great about when the stock market pulls back and your stocks pull back, you look and find where they're getting support, where are they being bought, and that gives you a big clue as to where institutions are buying. And so that's valuable information to have. This is Microsoft. I just showed you the weekly, and this is now the daily. This one is getting extended. It was trading a little wild because of the Sam Altman OpenAI drama, but this thing is a monster. It's a little extended, but you can see this Cup with handle pattern, cup, I should say without handle pattern, and it just took off here, when the Nasdaq started its rally. So it's been up 5 weeks in a row. You could see heavy volume here for Microsoft. And that looks good. I mean, you might say that one's a little extended, could use a little handle there. It's 4.3% above its 21. So just something to watch out for. These are still looking good to me. Meta, we had this one at 312. We had Microsoft at 340. I mean, so we've got some decent gains in these and can afford a pullback. You can trim some, wait for the pullback, buy on when they bounce off of moving averages. You can see the consolidation here. And Meta looks good to me as well. Amazon, this is one that I did buy last week. I like this setup here. You can see the 5-week consolidation and the 8 weeks. So this is 13 weeks of just consolidating. It sliced its 200 after earnings and just rallied right back through. And now right here, it's just kind of handling out sideways, which I like. You can see if I zoom in here, it's getting support at the 10. And so, like I say, when the stock pulls back, you can see it pulled back these 2 days, found support, went higher. Pull back to the 10 again, found support and went higher. So if it comes back to the 10, I would expect it to find support here on a rising. This is another power trend, where the moving averages are stacked. It's well above the 21. So if it pulls back, we're going to take advantage of that opportunity. Google is another one that I like. This is all AI. So if you believe in the AI theme, these are the stocks that are going to do well, and they're going to be benefit for a long time. It's not just 1 month or a couple of months and then adios. But this is Google, and this one formed, I believe it was a double base, but double bottom. But you can see the base here ran up, had a 3 weeks tight. Now it's formed another base here. It might just be, yeah, to me, that's a double bottom, but this is picking up pattern Rex, picking up a cup. That's fine. But once again, Google rallied through its 50. Now, if it pulls back here, it's trending in the right direction. And like I say, embrace the pullbacks. Tesla's one that, it's lagging. The auto manufacturers are one of the top groups all year, but they've really lagged recently. I got to admit, I like this, little type of wedge pattern of it, or pennant, or whatever you want to call it. If it starts pinching in here tighter, tight is good. And Tesla's been tight trading here, so I kind of like that pattern. I like it to get above the 50 though, but Tesla's looking better than it did. It rallied up to its 50. This is a double bottom base on NVIDIA. They reported blowout earnings. We've never seen a company with $1.2 trillion market cap that's reporting triple digit earnings and sales quarter after quarter. This is unheard of. And so we'll just see how the stock responds. It sold off, sold the news event, which is, pretty common. We've seen a lot of stocks do that, but I want to see what happens next week. And like I say, when they pull back, where is this thing going to find support? Is it just going to come down to the 21 here and then bounce? Is it going to come down to the 50? Time will tell, but you can see that 476 is an area of interest in NVIDIA. I'm going to take a look at some of the semiconductor stocks. I'm going to start with semiconductors. Now, I told you that the index is a little extended, and there's a lot of stocks that are extended that have run up. And, but what's overbought can become more overbought, just like what's oversold can become more oversold. But I don't like chasing overbought stocks. I don't like chasing performance. I like them coming out of consolidation, like RMBS here. It has made a big move. You can see the last 4 weeks right off the lows, rallied through its moving averages here. But like I say, if we get a pullback, we'll embrace a pullback and buy, once it bounces off a moving average. So that one looks good to me. Rambus, AMD, I got to show the weekly. This is a weekly review. And this has got a nice base here. I really like this setup with AMD. I didn't buy it. I kind of blew it. But from June, that's a long base there, 24 weeks. Yeah, it's run up with the index the last 4 weeks on declining volume. Obviously, last week was holiday trading. But I like this thing if it would, form a little handle here and pull back, to a moving average. And so I'm definitely keeping my eyes on Lisa Su and AMD. Broadcom, this one went up, I believe, the VMware, a deal went through in Europe, and you could see, I've got to show the weekly because this has got a big consolidation here, and then the rip higher, and then it consolidated, what, 8 weeks, another 8 weeks, whatever, this is like 4 months of just sideways. You can see it better maybe on the daily, but they're that 921, 925, and now it kind of ripped higher. It's pushing away from its base. It's a little extended there. I wouldn't chase it, but it's definitely a strong stock and one to keep an eye on. Somebody asked me about Applied Materials, and so I'm just going to go over this. This has a double bottom base. Yeah, this looks pretty good. Not extended. You can see it pull back to its 21 here. I don't know if that was earnings related or whatever. But anyway, it's got support here at the 10. It's bounced off there a couple of times. So Applied Materials looks pretty good to me. There you can see the consolidation here of 9 weeks on Applied Materials after the run-up. So you had a prior run, consolidation, trading tight, inside week. Yeah, I like Applied Materials. But if I'm going to buy a semiconductor stock, I want the best. So I want NVIDIA. And if it's extended, which it's not, then I'd go to AMD or another stock that's set up in a base, a RMBS. Definitely don't chase performance here. Okay, I'm going to go to software. Software and semiconductors are going to be beneficial or benefit from the artificial intelligence boom. And Palantir has been called by Dan Ives of Wedbush as the Messi of AI software. I don't know about that. A bit of hyperbole, but you can see it set up in this base here, this cup, and then a pullback last week. That's a big bearish engulfing candle, which closed near the low. So you're getting your pullback here in Palantir, and what you look for is where does it find support? This is a nice 1, 2, 3 day pullback. Is it going to find support here at the 21? We're gonna have to wait and see. You can see that the 10 is already starting to be a downtrending 10, so it needs to find support pretty quickly. But it still looks pretty good set up in that base there. Another one that I got to look at is net. We have a lot of stocks at MC Stock Charts that's set up in bases. I'm not going to go through all of them. I'm just going to give you some here on this YouTube video. But at the site, we have a lot of stocks that are set up in bases. So yes, the index is extended. A lot of stocks are extended, but a lot of stocks are set up in bases. This is one of them, Cloudflare. It's got these, 30%, 32% sales growth, triple digit earnings growth, quarter after quarter. That's consistent. I like that. I like stocks that have earnings and sales growth. Call me old fashioned. I don't rely just on the charts. This is an 18-week consolidation cup pattern. I would like a little handle here, a nice pullback to a moving average, shake some people out before moving higher. I like Cloudflare a lot. Datadog is an interesting one. I'd still consider this, one of the IPOs from 2019 had this huge run up and like everything else in 2020, 21 sold off like everything else in 2022, then had this stage one, cup with handle pattern. To me, this is still in a base. It's stage one base. It hasn't broken above. I think that's the 120 level there. 118. So that would be, the standard buy area. You could get in early. Obviously, swing traders, like this, when it broke out above this downtrend line, that is a nice move with volume. When you see companies or stocks do that, you definitely have to pay attention to them. We've seen quite a few of these lately. Yeah, a 28% move with heavy volume, and of course it's trended higher. But to me, Datadog it's still set up in a base and still has room to go, even though it's made a big move. APPF, Appfolio. This one IPO'd in 2015. You can see this big run, pull back like everything else in 2022, and now has formed this base here, and you can see the kind of the cup shape and then consolidation, 3 weeks tight, and then the pullback last week of nearly 4%. That's intriguing to me, but it did slice its 21. So where is it going to find support? Sometimes they just, well, I got to admit, most of the times when they slice the 21, they go to the 50. But this thing could rally up and it's definitely one that I'm watching. The last one is BRZE. And this is another one that I have on the IPO list. You can see it sold off. It came to market in the bear market and then now has rallied back up. So this is just like an IPO base that it's making here. This is a stage 2 consolidation. Last week, I'd have to say that it broke out, this consolidation, and now you're kind of chasing it. We did have this on our ready list, and it did make a nice move higher last week. So that's going to come off our list. Yeah, 6.5% move. So that is one of the extended stocks. I just wanted to show, this is coming out of a base consolidation. There's a lot of opportunities out there. It's not just the mega cap stocks. It's a lot of these, software, semiconductor names that are doing well. And drugs. I love the drug stocks. And like I said, when you're investing in a theme, like the iPhone was a theme, right? If you bought Apple when the iPhone came out and you were a big smartphone, iPad, the wearables, they had a nice run. And if you believe in the obesity, the diabetes, globally people are overweight and they're going to, they're going to use these drugs to, feel better about themselves, stay thin, kind of a vanity play, but also a health play. And Eli Lilly, I believe this is the one, and I know it's got a bigger market cap than Novo Nordisk, 570 billion market cap, but it's not an ADR. Novo's an ADR, and I believe you're going to get more institutional support. I love I own both of these, but I like Novo. But Eli Lilly, they don't just sell the weight loss drugs. I like this higher low pattern, and this is kind of pinching in here, tight, trading tight along the 21. If I zoom in there, it's getting support at the 21. So Eli Lilly, if you believe in the whole global obesity theme, Eli Lilly and Novo Nordisk are definitely two for longer term. So you're looking for pullbacks. You can see this is Novo Nordisk, and it gapped up. It's a kind of a gappy stock because it trades overseas. It's an ADR, and you'll find that in the morning it'll just gap up and kind of stay there, or gap down. It'll just kind of stay there and not move a whole lot intraday. I mean, you can see a gap higher. Got support at the 50, ran up to 104, got support again at the 50, ran up, got support again. So something's telling us here that it's getting bought at the 50. Now, on Friday, it made an all-time high here on news that they're entering Japan with their weight loss drugs in first half of 2024. And like I said, this is, if you're playing the global theme of obesity, these things are just getting started. This has a 474 billion market cap. So 100 billion market cap, smaller than Lilly, pretty similar sales growth. This has better earnings growth, but they're both quality stocks, and the only two drug stocks I'm really interested in right now. And this one is starting to push away from a base, so I wouldn't be surprised to see this breakout continue. It was only in a base for 5 weeks, so yeah. The base there for 15 weeks broke out, another base, and it's just what Novo Nordisk does. Anyway, that's it for the drugs. I want to go to the home builders, and these home builders are kind of tethered to the yield, which has been going down. It kind of topped at the 10-year topped at 5, and now it's been going down. So these things sold off when the yield went up, and now the yield goes down, and these things rip higher. This thing, I think it was the benign inflation data, and it gapped higher. Now it's formed this shelf-like pattern while the moving averages are catching up. This is, to me, I mean, you got to look at the weekly. It's a weekly review, but the right side of that base, was built quickly, and sometimes those are a little more prone to failure. But like I say, it's more tethered to the yield, and if the yield goes down, these things are going to do well. Pulte Homes is one, DR Horton, they all kind of look the same. This has this like a bullish wedge type pattern as it pulls back to a moving average in lighter volume. So that one looks good. Lennar, pretty similar, got the little wedge going here in lighter volume. So these look good. And like I say, if the yields go down, the 10-year goes down, these are going to go up. And that's true with growth stocks as well. So we keep an eye on the 10-year and watch it, I don't know, every weekend, maybe once a week, and you could see it top tier. And it's just been coming down steadily. So that's good for growth stocks, and it's definitely good for the home builder stocks. I've got to look at the retail stocks. I'm going to get to the restaurant stocks, but the one that I like is Decker's because of the Hoka and UGG brands are just selling real strong sales growth, and it had this gap higher, and this is why we watch gaps higher. This one gapped nearly 19%, and closed at 576, and now it's at 637. So that's a nice steady incline as the moving averages just trend higher highs, higher lows. Decker's looks fantastic. Texas Roadhouse, never eaten at Texas Roadhouse. We have them here, but I just wanted to point out this base, nice consolidation. You can see a big run up, now the big consolidation here, and this thing looks good on the weekly chart and the daily chart. Wing stop, this one had, similar to Texas Roadhouse, but this one is broken out, and it didn't have much of a handle here. It just broke out on this day and just is ripped higher. Now it's extended, so it's one of those extended stocks. Chipotle, this one looks good too. I got to go to the weekly for this. You can see the consolidation, consolidate, ran up. Now it's consolidated again, starting to push away from its base here on the weekly chart. You can see it on the daily here. So congrats to the longs. That's a nice move here off these lows of what's 1768, yeah, to 2219. That's a nice move. And the last group I want to show is the leisure services, ROKU. This one looks pretty good. I've got to go to the weekly on these because you can see the big, huge, massive sell-off. And then it popped out of a stage 1 base and is now consolidated here for 17 weeks. And you can see the relative strength line. Roku's showing strength within the base here. I would like to see a little pullback to a moving average to shake some people out. But I think that thing looks like it's ready to take out par or 100. RCL, Royal Caribbean, another leisure stock setting up in a base. We know that these things are booked for days. People want to get out and travel on these cruises, and you can see this, sold off with the index, 3-month sell off, and now the last, few weeks have powered higher. It was down 1% last week, so maybe we get a little shake here and an opportunity at one of these moving averages. And the last one I have to show you is Netflix. Netflix looks really good. I got to go to the weekly. Netflix, obviously, big run, consolidate, big run, consolidate. And now it's been up, 5 of the last 6 weeks. Decreasing volume here as it builds the right side of that base. And maybe we should expect a pullback here to the 10. That's why I say we can embrace pullbacks. Don't be afraid if the market pulls back a week or two, that's going to provide opportunities in some of these stocks that have run up and are extended. And anyway, that's it for me for this week. Thank you for watching, except for I lied. I have one more thing in honor of the great Steve Jobs. I did want to show you some of these extended stocks that I'm referring to. And this is, you can't chase these. These are FOMO. And please don't chase, I'm not chasing them. You can do whatever you want. You got your computer, your mouse, your account. You can do whatever you want with it, but this would be chasing here. These are extended stocks. I'm not going to spend a lot of time talking about them. You could just see from the chart. I mean, a kindergartner would know, it went from here 800 to 1069. Yeah, that looks like it's trending higher and kind of extended. That's Fair Isaac or FICO. Uber had a nice move prior to earnings. I was watching this one and I wanted to get it, but it made this big move prior to earnings. I think them and Lyft had some sort of deal, and it pushed higher with volume. This is why I look for stocks that are up on volume, at night after hours. And then it had earnings and just, gapped higher, and it's just been trading higher. But you could see it's, 8% above its 21, and just, it's getting a little extended. Coinbase is another one that has been ripping, broke its downtrend line, but now it's 22% above its 21. So yeah, I mean, it's got a cup shape pattern. That thing needs a pullback. Don't chase this performance here. KTOS is one that we had on our ready list at MC stock charts, but it broke out. Now it's extended from its base. You cannot chase performance. LRN This is, gapped higher. This is why we pay attention to these earnings gaps. ATGE in the same, consumer services education, gapped higher, just trading higher. But like I say, you cannot chase these. DraftKings, another one. MELI, the South American stocks have been doing really well, but you can't chase them. This one's way extended here. 10% above it's 21. ROST stores, the retail, department store play. This one broke out on earnings and it's, way above its 21 and extended from a base. So you just cannot buy these. Abercrombie and Fitch, this one is a serial gapper, just continues to gap, right? Out of earnings reports. These, this gap. And this is the earnings day where it pulled back to its 21 pound support, had an inside day on Friday, but there's no base here. This thing is just extended and it's a momentum play. You don't want to get caught in a pullback chasing momentum. And this is LPG, Dorian, LPG, oil and gas transportation, and this one just made a big move here. I believe that was a gap up on earnings and continued higher. Anyway, that's it for me at MC Stock Charts. We have a lot of stocks set up in bases. I only give you a little sample of them. Come check us out for free, 14 days for free, or sign up and you can get a lot of good ideas and strategies at mcstockcharts.com. Thank you for watching. Have a good weekend. This week we start December, we end November and start December, so maybe we'll get a little pullback that we can embrace and it'll be an opportunity. So at mcstockcharts.com, we never give up.